What an incredible ride that we've had in the first half of this year for investors. I mean, according to Yahoo Finance, we ended up the first half of the year at up nearly 6% on the S&P 500, between 5 and 6. And as you recall, from the highs in February to the lows in April, the stock market by the S&P 500 was down almost 20% intraday. So to make a comeback like that in the same quarter is incredible. It reminds me of COVID, when the S&P 500 dropped over 30% and came back very quickly after. And there's a reason why many financial advisors like myself believe that market timing and doing that well consistently over time is almost impossible or impossible. We still also have a lot of cash on the sidelines, and that tells me that there are some investors that are just cautious about what's going on, and also that their political views may be affecting their investor behavior, which we caution people not to do. We have a lot to look forward to that's positive in the second half of the year, such as lower interest rates, which could be an enormous tailwind for the economy and for things like stocks, as well as deregulation. And those two things, I think, can contribute to potentially higher consumer confidence and more business spending, so that we don't go into recession, which is where our belief is at the Wealth Consulting Group, and that we may actually even hit the targets that our CIO has used for the S&P 500, which I won't quote you that number, but it's much higher than we are today. So whether we get there or not, I don't know. But once again, I think that we have more positives than negatives to look forward to. And yes, geopolitical risk is still at the top of my list as different things I'm concerned about, but it seems as if that part is also getting better.